and gentlemen. Welcome again to Wealth Wednesdays. Today we have a great guest of mine, a guest I've been trying to get on. Happy to get him on, Mr. Jordan Zachery. Pleasure to have you here. Welcome.
Appreciate you, Mel. Happy to be here. Hope everybody's doing well.
Of course, doing well. Definitely doing well. I see I've caught you on the move. This is the great thing about being a small business owner. You're rarely ever in one position. You're always on the move, and there's always money to be made, right?
Absolutely. Always got to move and shake.
That's exactly it. Well, we appreciate you giving us the time, certainly so. Well, today, folks, we're going to be speaking about unlocking, of course, financial literacy. Our goal for this Wealth Wednesday theme that we're on. The goal of today is providing knowledge, right? Knowledge is power. Really, this is focused on our individual financial individuals, or our individuals managing their personal finance, as well as small business owners, and their management of finance as well. And so, certainly, we're going to be tapping into the resources and the knowledge that Mr. Jordan has, and we look forward to it. So, Jordan, to get us kicked off, I mean, I know in most situations, financial literacy is something that's talked about, but rarely is it ever actually followed through in terms of understanding what matters, understanding the important documents, important items to keep track of. From your perspective, just really briefly, give us about three reasons why you believe financial literacy matters in the community.
Well, I mean, the biggest thing though is just like you got to speak the language, right? You want to understand how to play the game. If you're not in the game, you're not on the board. So you want to understand how to be in the game and be able to understand how to be able to use financial literacy to be able to further your goals, right? So, for example, you want to be able to separate the personal and the actual business side of what you're doing and be able to tap into each side of those things to be able to further leverage whatever it may be to be able to extend those goals that you need. Um, so when it comes down to, being able to separate those ideas and those capacities, you want to be able to have clear expectations on what to do on those different aspects. And we can dig a little bit deeper depending on exactly how deep you want to go. Pause.
As we go through, we're going to speak even more towards this. I know something that is on the screen here is, only 34% of Americans, and this is based on various studies, only 34% of most Americans can actually answer basic financial questions, So it is by going deeper, again, pause, that we can actually get the tools that we need for success. Um, it also really helps us make informed decisions over the long term. And that's ultimately the most crucial for personal and business success. Right? So I couldn't agree more there with you. So we have here on the board some key financial terms that really anybody in business, anybody who's managing their personal net worth, their business assets, should really know and be familiar with. The first is your assets, right? We define that as what you own, including everything from your house to your car to your investments, cash. And then assets can be tangible, right? Things that you can actually physically touch or hold. And then they can also be intangible, right? So the intellectual property for the it can be things like NFT, where more tangible, intangible assets. So just think things with value that you can't physically put your hands on. Second one is your liabilities. Right. So this is, what do you owe to others? What do you owe to other people? This includes things like your mortgages, credit cards. Now, liabilities can also be in a strategic way, loans that you've taken on to do capital investments. Right. So this is now we're looking at assets that produce revenue for you when you think about a liability. Right. Couple of other ones we have are equity and liquidity. I'll let Jordan speak to equity a little bit. Jordan, when you think about your personal net worth, or when you think about business, what does equity mean to you?
I mean, equity's everything, right? But I'm going to rewind a little bit, okay?
Please.
So, at the end of the day, you can have good liabilities and bad liabilities, right? At the end of the day, all you want to do in order to build your personal wealth whether it's business side or the personal side, is to be able to have, some type of plan that's going to be able to build that asset side up, right? Assets are everything. So, you can have good liabilities as far as being able to take out a loan that's going to be able to appreciate higher than the liability you take out. So when I say that, what I mean is you take a loan out 5%, but you invest in something that's going to be able to return you 12 to 20% over time.
Mm-hmm.
So as long as your equity in that stake, which is the difference between your assets and your liability, as long as that's going to be able to speed up faster over time as far as the asset side and the liability side, then that's going to be your that's going to be a good investment. When it comes down to it, that's all just stagnant information, right? Because I'm sure you're going to get to this later, but cash flow wise, what you really want to care about, you want to make sure you have more cash coming in and cash flow out. But at the end of the day, when you look at the stagnant information, that's the balance sheet, which is the idea of having an idea of where you stand at a certain period of time. That's more static information.
Yeah, I could agree more. And so, in addition to that, now, what would you say equity is?
Yep. So equity is learning the difference between what you own something versus what it's worth, right? Let's say you buy a house, your mortgage is 300,000, but the house is worth 500,000. Then you have $20,000 worth of equity.
Yep, that's correct. So equity is really the value of your assets minus your liabilities, right? What's left after everything. And then lastly, your liquidity is how easily can you turn your assets into cash, right? If something were to come up or if an emergency was to come up, how easily could you handle that? How easily could you build up the cash to handle that?
Right. Right.
Anything you want to add to that before we move on to the next slide?
Yeah, I mean, of course, you have hard assets and you have liquid assets, right? So, like real estate businesses, they're going to be your hard assets. Those are going to be assets that are going to be harder to turn to liquid cash versus the stock market or anything as far as cash goes. Like, basically, the more liquid, more easily something is going to be able to turn over into liquid assets or cash, the more valuable it's going to be versus something that's going to be harder to turn over into cash, such as your businesses or your real estate, things like that.
So next up, we have what is going to be the meat and bones of today's conversation, which is the financial statements that we most focus on. Today, we're speaking about balance sheets, income statement, and a cash flow statement as well. So Jordan, you were speaking about the balance sheet. Mentioned, of course, it's a snapshot of the financial position of where you are at that point in time.
Right. So it's going to be your assets and minus your liabilities is going to give you your net worth. So that can be on the personal side or the business side, right? So if you're really going to be able to understand finance, whether it's corporate level or personal side, which is business or personal, it's going to be the same idea, right? Whether you're looking at your household or your actual business, it's going to be the same idea. What do you own, whether it's cash or liquid, versus what do you owe, and that's going to be your net worth.
Now the income statement. I know when I was in Nigeria, we always knew it as the P&L statement, the profit and loss statement. So I'll walk me through a little bit. It says it in its name, but of course we can always get more knowledge on that.
Yeah, so I mean that's going to be a little bit depending on how deep you want to go. It depends on how you want to look at it, but essentially it's going to say what did you spend this year versus what did you earn. And of course that can get a little bit complex depending on how deep you want to go into accounting. But essentially that's exactly high level what you want to look at.
So would you say from a personal finance point of view, your budget is almost like your baseline P&L statement for your personal self?
To a certain extent, yep. To a certain extent, yeah.
And then as you build a business or as you get into business, it gets certainly more eccentric.
Right. So you can look at things such as accrued interest or accrued, depreciated expenses, things like that. We can get a little bit more complex, but that's essentially what you want to look at. And then I'm sure you're going to get to this next, which is going to be the cash flow statement.
That's exactly it. Go on.
Right. So I'm sorry, folks. Give me a second here. I'm about to actually walk into the house. Just got home.
Not a problem. Thank you so much.
It's been a long day. Appreciate you, sir.
No, we appreciate you and the Uber man.
And the Uber man. Not sure, man. You got to live right. This is my limo driver.
Absolutely.
No, I'm joking. I'm joking. No, but yeah. Give me 1 second here. Sorry, guys.
No problem. And as Jordan goes in, we'll start to look now more specifically into the balance sheet. Of course, um, he mentioned three specific things that are always present: your assets, your liabilities, and your equity. Um, your assets are, of course, assets that are or items that are owned by the business. Things like your cash, your inventory, your equipment. When you think about your personal finance, your assets are the things you own, and I would say more specifically outright, but in the general sense that you own, because of course your assets minus how much you're owing on whatever you're owing represents your equity, right? So your assets are what you own, your liabilities are what you owe or obligations you may have for the assets that you own or other capital expenditures. And then your equity is what's left over when you subtract those things, right? When you look at, and in fact, ultimately, your assets should equal actually your liability versus your equity.
More. I'm back here. Sorry about that.
Not a problem. So I was going into a little bit of balance sheets here. I'll let you explain even more what this is. Now we're going more specifically into the document itself. In front of us, we have an explanation of assets, liabilities, and equity. So I'll let you go through it a little bit.
Yeah, yeah. So, no, I'm not gonna lie to you. I can't even see what you guys are looking at.
No problem at all.
But like you said, like everything about that is correct. We can get a little bit further deeper into that, but I think everything you said is exactly, hitting everything on the head. But overall, you just want to get an idea of what you own, get an idea of what you owe, and then go from there. You just won't be dropping. Um,
Next up, we have the income statement. And really, I title this Tracking Profitability. Like, it helps you really keep a good understanding of your cash flows over an extended period of time or long term. So, walk through a little bit. We have the revenue, we have the expenses, and then, of course, profit at the end of it. Um,
mhm.
how does maintaining a good income statement impact a small business owner? Not just now, but also as you think about the impact of taxes and things like that.
Yeah, so I mean, okay, so when you really, so these are just three different tools that we use to be able to look at an actual either whether it's personal or business, right? They all intertwine together. You know, at the end of the day, what you want to do is understand how they all work together. It's a whole holistic picture. So your balance sheet is going to give you an idea of basically like it's like your report card, right? Like how much did we improve from this year to that year, this quarter to that quarter, and then your income statement is going to say, okay, well, what's the level of improvement from this point to that point, and the cash flow statement is going to be more so granular, where it's going to say, this is how we improve from this point to that point. And that's like giving you a high level idea of why those things are important. So income statement is going to tell you, okay, this is what we spent our money on, and this is where it went. And then the cash flow is going to tell you, this is why we spent our money on, and this is why we spent our money on, or this is why we, got this amount of money. And so it's like the what, why, and how.
Yep. Yep. And
That's
that's why.
exactly what you want to look at it as.
Very good. And I see here that's exactly why we see within the cash flow statement the operating activities, investing activities, financing activities. It's really highlighting for you what were we doing with our money through that time.
Exactly right. Exactly right. So, and that's you can basically level it down to anything that you do. Whether it's finance or anything else. It's always the what, why, and how, and that's the same thing when it comes to finance. You want to understand exactly how you got to the what, why you got there, how you got there, and that's exactly how you go from balance sheet, income statement, and the cash flow statement. But cash flow, obviously, everyone understands why that's extremely important because it's the base level, the granular details as far as how you get from A to B.
So, utilizing these tools now, we really have to make informed decisions based on these. And I think the most important thing to take away from this, first of all, is you want these things to be a tool for you, like you said, the what, why, and how. Right? You want these things to be a tool for you. So it's important that you build a habit of keeping it accurate that is keeping yourself honest with what's going in those forms. Um, and then of course being able to analyze that, discuss it, and then act on it. Right.
Mm-hmm.
So we really want to highlight for you that it's not just a matter of having the document and for the many things that it's for, whether it's taxes or any of these other things. It's also for you yourself and how you utilize it in order to make informed decisions about your business. Jordan, in your experience, have you seen anyone who maybe didn't utilize these documents and then started using these documents and had a significant change in how they manage their business or how they manage their finances?
Yeah, so my personal experience, I think most people take their personal finances more, closer to heart, right? That's more important to them. So the way that I look at things is, you want to keep yourself accountable by being able to like understand exactly what's going on with your money. Because at the end of the day, that's your money. But then you want to keep it, church and state. You want to keep your money that's personal versus your business separate. And then that's when you have your advisors, right? You have your accountants, you have your financial advisors, you have your attorneys to be able to kind of help guide you to be non-biased, to give you an objective opinion about what's the best thing to do, what's going on with your money, what's your balance sheet, your P&L, all the things we just talked about. So that way you can keep the proper level of flow into your personal assets. That's going to be able to help you build wealth over time, right? That's the most important aspect of it. So being able to have that understanding from a you know, biased standpoint and a more objective standpoint is very important.
So some resources for continued learning about these. Investopedia is always great. Not Wikipedia, Investopedia.
Mm-hmm.
FINRA, using its dedicated investor education tools, also help you gain knowledge on this. Coursera and the Khan Academy, a lot of them have free finance resources that you can use starting from a basic learning point and then build it up. And then lastly, we also have our blog on apexvisionary.com. We have in-depth financial articles. We have more lateral tools as well. We have a financial review tool for understanding, okay, what am I missing within my business that I could take advantage of? Certainly peruse the website and it gives you a good understanding of these things. And then lastly, as I always say in every single one of these, reach out to your financial advisor, reach out to your financial planner, speak with a wealth management professional like my brother Jordan here or myself, and really make sure you're moving with the game plan. Okay, ultimately, that's the most important thing. Now, I left a few minutes here for us to go through a Q&A with Jordan, but it also help him share some of his thoughts here. So, Jordan, I divided these into three. We're going to start with personal financial wisdom is what I called it. So Jordan, what are the most pivotal what was the most pivotal financial decision you made early in your career that shaped your approach to wealth management today?
Yeah, so I mean, obviously, when you're like young, you just start making money, you don't really know what you're doing. But I think that, having a great mentor who can give you some good advice, I think that's all you do. Right? So the first thing that I did was save early on. Save early on is always going to be better. And then obviously start investing. So I think having a good mentor, being able to save it early on and get educated is going to be the basic things you want to do. But at the end of the day, you can invest everything and then lose everything at the same time, right? But the best thing to do is to be a good steward of your wealth, right? And you want to make sure you have a purpose for every dollar that you have.
Yep.
Even if you want to, go out and have a good time, make sure it's defined in a plan that you have, right? Whether it's 20% of your wealth that you want to spend on money, 5% of your wealth. Some people want to retire at, 25. Some people retire later on. At the end of the day, you want to have a plan. So being able to get advice, understand how the money game works, how financial literacy is important to being able to guide you through that process, and being able to get advice and get mentorship through the whole process is very important. That's what I would say.
Very good. Thank you for that. Now, can you share a personal story where a financial setback taught you a valuable lesson that you now pass into your clients?
All right. How real we want to get with this? Okay, I just want to be sure how real we want to get with this.
We don't have to hear about your early 20s.
Okay. I just want to make sure. All right. So financial setback. Let me see. Honestly, I I've been really fortunate. I would say this though, and this is something I learned. And even no matter how old you are, where you are in your financial journey, definitely set up like an estate plan and a will. And I know it sounds boring, but you just never know. You never know what's going to happen. I've seen plenty of situations where people were either 25, 30 years old, whether you got $1,000, $100 million. You want to make sure you know where your money's going. That's one thing. But for two, I guess a personal story for myself is learn how credit works too, because you want to make sure your credit's right. Because that's giving me a lot of leverage in the future. That's giving me a lot of leverage over my journey too. So I would say credit. Understand how credit works, but also setting up your estate and your plan, and knowing how trust and estates work would be my probably top two things that are very much undervalued in this world.
Very good, very good. And then lastly, with regard to personal finance, in your experience, what's the single most underrated habit that people overlook when it comes to building and maintaining financial health?
Um, I think it makes things simple and making it boring. Like, people really don't budget. Like they really don't budget their cash flow. So like kind of we were talking about earlier, right? Like no matter how much money you make, you want to make sure you know where every dollar's going. And that kind of seems kind of maybe a little bit, you know, granular, but like you got to know where your dollars are going. Um, you know, every dollar matters. You know, it's not just for yourself, but also for your kin. So you want to make sure you know what's going on with your money, so that way, you know, it goes towards your plan that you want to have for you and your family.
I couldn't agree more, brother. I couldn't agree more. Um, yeah, I talk about budgeting, and that for me that was why it was the first thing I covered in these series.
Yeah.
I call it the most important. It's the foundation, right? Um, and really, when you give every dollar a role, when you give every dollar a job, there's nothing left out. Like nobody's left out. There's nothing left on the table. You know.
Right.
It also
But
really.
I was gonna say, but I mean, if you really want to get down to the nitty gritty, like there's a lot of ways to make some real money out there in different capacities, right? Whether you want to talk about trading or real estate or businesses wise, like you can make some money, but the first step is like we're talking about today, just setting up the foundation. Because you ain't got a foundation, you can make a lot of money, but you also can lose it too. There's different ways to trade options, to trade and make money in other aspects, but you don't want to lose it if you ain't got a clear foundation about what you're doing and why.
All right, so now moving on to more small business related items. So, Jordan, what's the most common financial mistake you see small business owners make, and how could they avoid
The most common one is not separating their business from their personal. I mean, I see that too many. Like, I feel like that's the most simple thing, but people just kind of sometimes like they just don't do it for some reason. I don't know why. Maybe they don't expect their business to make money, and they just like mix the two, and then that's when they get in trouble because that can just set up a headache when it comes to taxes, when it comes to things that can make your business more profitable from a tax standpoint. Like, just separate it. Just open up an LLC or even so just open up a separate account for business and just separate the two. That'll make things so much more easier and save you a lot of money and a lot of headache. That, and then also it'll help you with funding. So when you want to get your business funded, it's been up for 2 years, even if you're not profitable, but it was up for 2 years and it's still open and you still can afford it, you're going to be able to get some funding and be able to, inject some cash flow into your actual, going back to what we were saying earlier, a piece of that cash flow is not just actually money that's coming in from the income statement, but also you get an influx of cash from a loan or a grant, right? So those things are very important when it comes to separating business and separating small business from your actual personal accounts.
Very good, very good. I mean, even I myself, I think when I first got into business, I fell victim to that as well. I think most people, first of all, I think most people don't ever think they're going to get audited.
I did too. I'm not gonna lie. I did too. That's all I can talk. I can talk about it. I did too. Everybody does.
I think when we all start, we're like, you know what?
Right.
I'm never gonna get audited. I am always gonna be small fish, and then you're getting audited, and you're like, wait, what?
Whoa, what's going on here?
What's
You gotta pay more money. You gotta pay some CPA or something like that. Yeah.
Exactly.
No, you don't want those. You don't want those problems. You don't want those problems.
So
Mhm.
that in mind, and when you're advising small businesses, what strategies do you recommend for them with regard to balancing growth with financial stability, especially during uncertain economic periods like right now?
Reinvest into your business. If you have the capacity to do so, reinvest into your business. The first thing you want to do, right? Because don't look at it as if like you're not taking a profit, you're not taking money, into account that you're earning, but look at it as if like, you know, okay, I made $20,000 a quarter, and I put it back into my business, so I'm going to 20x that next year, right? Look at it that way. 20x meaning like you're going to make 20,000 times more over the next, 2 quarters or 2 years than you did this time, based on you reinvested into your business and make your business that much more valuable versus you taking the $20,000 and putting it into your personal account, right? Just like anything else, if you want to keep it real, that's like if you're doing some other activity, you're not going to take that money from those other activities and just put it into your pocket. You're going to go and buy some more.
Yeah,
So,
yes,
yeah, I mean, you rinse and repeat.
yes,
So, it just
sir.
it makes sense. So, that's what I would say. Definitely reinvest into your business. I think that's pretty obvious. Same thing, like I said before, separate church from state. Um, and just keep a good organization behind what you're doing, right? And if you need help with that, get some help, get some advice, right? You got your creative types, you got your advice from people who are very like anal and very good at that kind of stuff when it comes to spreadsheets and like that. But just like have a plan, right? Like you want to make sure you have an exact plan for what you're doing for each asset of your business, and just be smart about
I think this actually,
it. Somebody who knows how to say, okay, this person is going to be my account, this person is going to be my lawyer, this person is going to be my, my salesperson, this person is going to be my operational person, right? Like COO does not play the role of CEO. So you want to make sure you understand what's going on and have a vision. That's your role as a small business owner.
very good. And actually, that ties right into our third question here within this one is how do you guide small business clients in choosing the right financial tools like accounting software, investment options that suit really what their needs are?
Yeah, no, that's a great question. I think that the most important thing is when it comes to A, what kind of business it is, and B, what are their cash flow needs, right? A small business, a small restaurant is not going to be the same thing as a consulting firm, right? You're not going to be very inventory heavy or overhead heavy if you're a consulting firm versus a manufacturing firm or, a restaurant. So you're going to have different needs. So understanding those needs and understanding exactly what that client needs are going to play a key factor in those roles. So I would just get a clear understanding of what they're doing and be able to guide them in that way. But again, like I said before, just you really want to understand, you want to work on the business, not in the business.
Yep.
Once you establish a system, then you don't have to work in the business, you work on the business to be able to grow it. And that's going to make the business more profitable. And you place the pieces in place so that way you can grow the business and make everybody else money as well.
Couldn't agree more. I know I've said that most of today, but I couldn't agree more. Very good. So this last part, I'll condense it into really one question. What are a couple of resources or steps that you would recommend someone if they were starting from scratch to improve their financial literacy? And then secondly, how can financial education be better integrated into our communities? What role can financial advisors play in this?
Yeah, so I think there's plenty of resources out there. It's, we live in a world now with whether it's AI or Google, I know it's a lot of bad information out there. But like you said earlier, like those different websites you mentioned, whether it's Investopedia or, other websites like you mentioned earlier. But I think that the best way of getting information is to going to educated individuals who know and have experience in those areas. Like you mentioned, advisors, whether it's a CPA, an actual financial advisor, someone who actually has real life experience in that is going to be able to give you the best advice, right? Like I'm not going to, like, for example, right? Like if you get a rash in your arm and you start WebMDing your stuff and the WebMD tells you, you're about to die tomorrow, that's not a good idea. You don't want to trust WebMD. You want to go to a doctor. You're not going to go to the internet to trust all that kind of information. So the best thing is to get it from the source, people who have real life experience. And the role of a financial advisor is going to be like kind of like the quarterback, right? So as a financial advisor, you're going to be someone who is able to understand the role a CPA plays and have a generalized understanding of what it means to be a CPA, what it means to be an estate planning attorney, what it means to be a CFO, what it means to be a CEO. You know, my opinion, I'm biased, but I think that's kind of like the best of both worlds, where you're kind of playing the quarterback and you're telling him, okay, go pass this part to the receiver, go run this ball over here with the running back, go hand it off over here to the tight end. You know what I mean? So that's kind of how I look at it.